Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 17th of June. I'm Daniel Lam, your host for the podcast. Euro area equities have outperformed expectations in the second quarter. Its economic data has been better than consensus forecast. Inflation is less sticky than that in the US, enabling the ECB to start its rate-cutting cycle ahead of the Fed, which is supportive for risky assets. And of course, Euro area equities remain cheaper than their counterparts in the US. We believe in the third quarter, there will be opportunities ahead for investors in Euro area equities because of the French snap elections. Now, as we head into France's parliamentary election, where Le Pen's RN will likely gain ground, there could be increasing volatility ahead in Euro area equities because of the influence of the RN to diminish EU cohesion, France's fiscal position and any inclination to disregard EU rules, and potential for Italian PM Meloni to harden her stance towards the EU with an anti-EU ally gaining influence in France. Now, since the start of May, hedge funds have been covering shorts in Euro area equities, but there is indication that fast money managers may now begin to add to shorts again. Also, managed futures accounts, which have been significant sellers over the last 2 weeks, still have some room to trim their longs further. Momentum is likely to remain weak over the next couple of weeks, and so any lick lower in EU equities could get exacerbated by further selling from these managed futures accounts, which are typically trend following. Now, of course, this can give investors opportunities in Euro area equities on a regional level when the dust settles. But for those that are more tactically oriented, the sector interplay is where things can get even more interesting. For example, heading into both the 2017 and 2022 French presidential and parliamentary elections, French equity and EU financials came under the most pressure. Indeed, price action since the announcement of the elections shows that these markets have been targeted as the low-hanging fruits to sell. But on the other hand, we notice that the Euro area technology sector, which we're overweight on, has been powering ahead recently. And one of the factors would be the rotation of funds from sectors like financials, which is typically more susceptible to such political uncertainties. And so we do see such dislocations in the third quarter, leading to opportunities for investors. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.